Hi there, welcome to Grain TV. I'm Kevin McNew. It's Thursday, March 17th. We had a mixed day in grains. Let's take a look at the Grain Edge trading platform and see where we closed. In Chicago, corn was up 1/4 cent, continuing to hold relatively flat around that 368 mark. Beans up 3 1/4, although at one point well above $9, up 9 cents on the day before settling lower. Wheat was the leader to the downside, losing 8 1/4 in Chicago, off 14 in Kansas City. That really dragged down corn and beans midday as wheat really took it in the shorts. Let's take a look at some of the news that was out today. First of all, let's talk again about the US dollar that continues to take new lows. We were off 1.1% today. As we're taping this, we are off 2.5% since the Fed announcement that they would likely not increase rates 3 times in the coming year, but more likely 2 times. The Brazilian real also reversed course after being off in the last few days, has now gone higher. That's positive for U.S. commodities, as an increased dollar or an increased value of the Brazilian real against the dollar makes their commodities more expensive. In other news, crude oil continues to rally. It gained $2 a barrel yesterday, up $1.70 today, getting well above $40 in Brent crude. So things are starting to change pretty fundamentally in the outside markets, which I think has some positive implications for grains in particular. Let's take a look at weekly export sales that came out this morning from USDA. These were pretty supportive, especially in the case of corn. Corn old crop sales well above expectations at 1.2 million metric tons for the week versus expectations of 700,000 to 1.1 million metric tons. Old crop sales were a little low at only 61,000, but it's still early in the season. Old crop beans also showing a respectable week, coming in just below the high end of expectations at 623,000 metric tons. New crop sales were well above expectations at 235,000 metric tons. And wheat was on the low end or below expectations for old crop, but above for new crop. So overall, these were pretty good numbers. And again, the value of the US dollar going down can only be supportive for our grain exports as we move forward. I think the next 6 months for US exports are going to be a lot different story than they were in the previous 6 months. The US dollar is about 5% below its highs back in January, and that strong dollar has really led us to an uncompetitive situation, especially in wheat, and following that in the case of corn, where we've had some struggles in seeing any sort of significant export program. Let's turn now to some weather news. You know, the drought monitor out of University of Nebraska came out today, and that just reinforced what we've been talking about, which is the continued dryness in that Texas panhandle all the way up into western Kansas. You can see this area in yellow is the area that has actually seen a decline in dryness, or a increase in their drought classification. So that area is really a hotbed, not only in terms of dryness, but it is the central growing region for hard red winter wheat out of Kansas City. So when we talk about hard red winter wheat, that's the main growing area, which, as you can see, is dry. Even in the northern plains, where they have a mixture of hard red winter wheat and hard red spring, that area is seeing an expansion in its drought classification. Now, other news out today, the national, or NOAA came out with their long-term precipitation forecast for April through June, and this may have been some trigger in selling in the wheat market, because it shows an expectation, at least, of above average precip in that April to June window. That green area shaded in Oklahoma, Texas, Kansas is expected to see higher precipitation. That's according to NOAA. But we turn to our friends at Planalytics today to get their guidance on it, and they break out their weather forecasts a little differently. Let's first talk about the next few weeks, and Planalytics shows really a continuation of dry conditions in the plains, that area in yellow. The next 7 days, the 7 to 14 day outlook, all of those areas for hard red winter wheat country show continued dryness, other than certain pockets of southern Oklahoma, northern Texas. But when we get into April, and when I think about hard red winter wheat in that Kansas, Texas, Oklahoma area, I think about about that April 15th to May 15th as sort of the critical growing area where they need that moisture coming out of dormancy and getting into development. And what we're seeing from Planalytics is the expectation, at least, of a fairly dry April in Kansas, Oklahoma, Texas, and into May as well. So there's no real outlook here for above normal precipitation in that critical April to May window, but you do see it in the greens and in the blues when we turn the calendar to June. In my opinion, that is really too late for that key hard red winter wheat condition or hard red winter wheat area of the southern plains. If we're into rain in June, it's probably past its development point, and so that's going to do little in terms of stimulating crop yields. So, there's still a lot of growing season left, but that's what the weather forecasters are showing us right now, continued dryness in the plains. Let's switch gears and talk about corn. Corn had a really good day to start. And actually got up as high as 372.5, but managed to close well off of that thanks to the declining wheat market. But what's supportive here is we have held above that 365.5. When we came back from the weekend and started trading Sunday night, we gapped higher. We have held that gap at 365.5 all trade sessions this week. And even today, breaking down a little bit closer to that, but managed to get above it. So watch that 365.5. I'm still friendly to corn. I think things are starting to shift with the change in the dollar. I think crude oil going higher is helping commodities overall. We're getting closer to that March 31st planting report, and I don't see shorts being added here. I see, if anything, the record large short position starting to be exited as we head into that report. So, but on the other hand, if we were to break that 365.5, we could see more selling pressure. So watch that mark, 365.5. Today's close, 368.5. Still a pretty good margin above that. That's all we got on Grain TV. As always, if you have questions or you want to learn about our marketing services for farmers, give us a call at 877-472-4607 or visit us online at grainhedge.com to learn how we can help you. Silver right now is at historically low levels. Starting with the financial crisis of '08, silver prices made an epic run from $10 an ounce to $50 an ounce in just 3 years. Silver looks poised to make another run higher. Here's why. Today's headlines show wide-scale economic risk, central banks using negative interest rates to stimulate economic growth, and the continued explosion of government debt around the world. All these factors are creating a flight to safety in physical metals. On the fundamental side, high mining costs limits new silver supplies, while demand for silver continues to expand through rapid use in cell phones, plasma TVs, and batteries. All these factors suggest taking action at today's prices before silver reaches $25 an ounce. Our precious metals desk at GrainHedge can educate you about investing in physical metals. Their goal is to put the most amount of silver and gold in your hands at the least cost. To get started, contact Rodney at grainhedge.com or by phone at 877-472-4607.